Hi, accounting students. This is Mrs. Bloomquist. Welcome to the last lesson in Chapter 16, which also happens to be our last lesson in the chapter. Remember, Chapter 16 deals with the financial statements and closing entries for a corporation, and we are all the way down to the last section here where we prepare a post-closing trial balance. You probably remember back to the first half of the book where we did the post-closing trial balance for the web service company, which that was way back in Chapter 8, and we were looking at the financial reports for a sole proprietorship. Now we're looking at the financial reports for a corporation, and we just want to keep in mind that much of what we're doing here for the general ledger after the closing entries are posted is going to feel pretty similar to what we did for that Delgado Web Services. Okay, so what you see here is that the general ledger after the closing entries are posted, you might want to look on page 502 because I don't think that this is very large, and again, sometimes it's just easier to see when you're looking at your book, but what you can see here is the December 31st balance in these accounts, and what you're going to notice then is that there are some accounts that are zero and there are some accounts that have a balance in them. So as we look at our post-closing trial balance, we want to make sure that we remember that part of the reason we do the post-closing trial balance is that we want to prove that our debits equal our credits in the general ledger. And so after we have done all of the closing entries, the post-closing trial balance should really only have balances for asset, liability, and capital accounts. All of the revenue and the cost and the expense accounts and even the dividends account should all have zero balances. The post-closing trial balance should list all of the balance sheet accounts in the order that they're listed in the chart of accounts. So you just want to make sure that that's the order that you're using. Debit balance amounts are listed in the first, and the credit then balance accounts are listed in the second column. And the debits must equal the credits because you're proving what you've got going on. So again, post-closing trial balances are heading. All of our accounts with the balance are listed. The account balances are listed. We're going to go ahead and total everything up and then make sure that you remember that we're double ruling here to prove that our debits equal our credits. Okay, so now as we think about the accounting cycle for a merchandising business that's organized as a corporation, what we're going to know is that it's very similar to what we did for that sole proprietorship, except we might have additional accounts or additional financial statements that need to be prepared because of differences in how the business operates. So the first thing we do, we check the source documents for accuracy and that the transactions are analyzed into debit and credit parts. And remember, this is the beginning of the accounting cycle and we're currently at the end. So way back in the beginning, we used those source documents. We recorded the transactions in a journal. The journal entries were posted into accounts payable ledger and the accounts receivable ledger and the general ledger. The schedules of all of our accounts payable and our accounts receivable were prepared from the subsidiary ledgers. Unadjusted trial balance is prepared from the general ledger. My phone's ringing, I better answer it. All right, sorry, it was an unknown number, but it could have been to do with one of my kids, so I had to answer the phone. Okay, so we do the unadjusted trial balance and we prepare that from our general ledger. That's step 5. Then all of our adjusting entries are going to be journalized. We post those adjusting entries to the general ledger. An adjusted trial balance is prepared then from the general ledger. Financial statements are prepared from the adjusted trial balance. We go ahead and journalize our closing entries. We post those entries to the general ledger. And then the post-closing trial balance is prepared. And we want to make sure that we're proving our debits equal our credits when we do that post-closing trial balance. And we're confirming that the only accounts that have a balance are those asset accounts, the liability accounts, and the capital accounts. All right, so we are down to the end section here. So which accounts and balances are listed on the post-closing trial balance and what order are they listed? First of all, general ledger accounts that have balances, and the only ones that should have a balance are asset, liability, and equity accounts. Accounts that are listed in the same order as they appear in the general ledger. The purpose of preparing that post-closing trial balance, we really need to prove that our debits and our credits are equal. That's the accounting equation. What two steps in the accounting cycle occur after adjusting entries are posted to the general ledger? An adjusted general ledger is prepared, and then the financial statements are prepared from that adjusted trial balance. All right, at this point, you want to be thinking about why it is that we do each step in the accounting cycle in the order we do it. And the reality is the information builds off each step. So we do them in the correct order because we need the information from the previous step in order to continue. And then finally, we want to be thinking about dividends payable actually does appear on the post-closing trial balance, but there's no dividend account. And so what we really want to be thinking about is dividends payable. Well, that's the amount that we've declared, but we haven't paid yet to stockholders, and it's a liability. And liabilities, along with any assets and stockholders' equities, are listed on the post-closing trial balance. Dividends is actually one of those temporary accounts, and the balance is closed out to the retained earnings account whenever we have a period end closing. So if we close quarterly or we close annually, our dividends account is a temporary account and should be zeroed out. From here, you want to go ahead and do the work together and on your own in Aplia. Don't forget to complete the forms online, and then you can work through your last set of application, mastery, and challenge problems in Aplia. Good luck!